Good morning, everyone. Welcome to our Tuesday morning trading room. Hang on a second here. We'll get the screen share going on. The market's just opening up. For the North American Open. Yesterday, as anticipated, the markets didn't really do a whole lot after the early decline that we saw out of the open. The market, you can see, spent most of the time just going back and forth here. There were still some decent moves, but we were pretty much confined to a rather large trading range. The close yesterday, I think, was somewhere around 72.04 or 5, somewhere around there. So we were opening up this morning with a little bit of a downside gap, not a huge gap. And we're kind of at the top end of yesterday's trading range as well. So yesterday the market kind of bouncing off of that 72.50-ish range. We'll see what they do anyway. It's still early. Don't want to get too excited here. Hey, way to go, Floyd. Floyd says made $900 on a crude oil move. Nicely done, Floyd. Good job. Wow. Yeah, crude oil, it's used to be a super volatile market. Now it's, you got to sit on it for quite a while. But pulling $900 out of there, that's fantastic. All right, here the NASDAQ just kind of bouncing around a little bit. We definitely have some bullishness going on. Here is the daily NASDAQ chart. Just as a reference, let's see where we're sitting. Aha! If we draw a trend line across here, you can see the market slowing down a little bit as it got around 72. And perhaps the trend line has encouraged some bullish buying. We could see a rally back maybe to, I don't know, 73.50 maybe. It looks like there's quite a bit of congestion at that particular price level. Thanks, Floyd. Floyd reminding us the Fed minutes are out today and tomorrow. So that could throw a little bit of a wrinkle in things. Good old FOMC reports. Wow. I guess I should have got on board early. Look at the crazy move we're seeing here out of the open. I sure hope that wasn't the move of the day. So right out of the open, we got the buy signal, and they have not looked back. That's all right. If the market is going to be trending here today, we should have another opportunity. Yeah, I know. Ray says the bulls started this at 9:24 and just shot up. So just before the market opened, they really started rallying the market hard. For those of you who like your first in-sync eagle signal, well, there it is right there, I guess. If that one looked a little dodgy to you, which I suppose it would, the next one also really good follow through, and you only have to wait a minute or so to get that one. Okay, we are getting a number 2 signal. I'm not all that crazy about shorting it just yet. I'm looking for that 232 setup before maybe I try to hop on the selling bandwagon. I'm also watching the E-mini S&P, and it too shot up, although not quite as crazy as the NASDAQ here. All right, so the Geiger counter is looking a little bit bullish. We're going to get a second push opportunity here on the Raptor. Oh, shoot. While I was looking for that, the 232 developed right in front of my eyes. It fell off here to the hard edge, which would be the target. Let me cancel this. Wow, we're all over the map here this morning. Look at this. The Hawk scalper now bearish. The Falcon swing trader, well, technically, we are working a possible trend change signal here. The eagle back into the hard edge. So we've produced a red bar buy signal. That's pretty bullish overall. And the Raptor now also at a bit of a loss. Okay. A lot of yellow bars cropping up here. That's making me think maybe we're going to see a reverse. Or maybe not. Here, the Hawk, whenever you get all these yellow bars cropping up, you can see they're pretty much all printing at more or less the same price level. That's an indication that the market is definitely sideways. Here now, a first micro macro cross lower, and if they don't run away on me, I'm going to try to run a trade out on this one. So we're at the lows. I'll risk it up here. Let's pull the break even a little. Oh my. All kinds of jumping around. Okay. I should probably move into a more aggressive stop strategy, such as the parabolics. Wow. All right. Quick little hiccup there, tagging me out, but it was all right. Profitable trade all the same. That's what we're after. I was hoping it maybe had a little bit more follow through to it. Did not work out that way. Okay, here now on the Raptor, we're producing our #1 signal, and we do have a second push opportunity. Can I cover that one? Ooh, I can too. All right, it's a little drawn out, and there is the danger that the market may try to retest the highs of the morning. So leave those stops as far back as possible. All right, they're not quite ready yet, so we'll just put that one back on the shelf. And there they go. You look away for a second and the bottom falls out of the market. Shoot. I'm annoyed because I was waiting for that little bit of a move, that hard edge bounce. And I just happened to be glancing at my other chart. They may have unfolded a little bit too quickly for me to get on board there, but you can see that was a decent opportunity. No problem whatsoever hitting the high probability target. We've got now one of our discretionary signals building. Maybe we'll get another hard edge bounce. Okay, we more or less have the market pinched at this point, and I don't do this often, but you could entertain an OCO order where we would short below here, we would buy above here. Now remember, when you're using your OCO orders, you first click your OCO on, and then you're going to right click on your chart to place your orders, and these orders are live as soon as you put them on, so you can place them further away and then pull them into where you would like them to be. OCO orders by nature are a little bit riskier. Just because you're looking for a proper breakout, right? Those fake breakouts can be deadly. I think I would prefer a breakout to the short side. I think. I'll tell you in a minute. Okay, they're testing the bottom end. I'm going to hold my stops here for a moment. As oftentimes there's a little bit of a hesitation on these breakouts. Okay, got the trade to break even. Let's see if they'll give me any more. Pretty please. Little early reaction here near the primary resistance line, just above the low of the day or of the morning. Come on. If we make a run at that low, there's a pretty good chance we're going to try to fill that overnight gap. That could see the market trade all the way back down to, what did I say it was? 72? 72.04. And let's see if we have a, oh yeah, there you go. We got the median line at 71.98. So let's throw a profit order in here. Make sure you select the right order. So the low of the morning around the 72.23.25 zone. Looking to pick up some sellers, maybe knock out a few buyers. Oh, don't look back too far now. Okay, well, that was all right. A little bit of a pushback off of the low of the morning and that primary resistance zone. Quick little trend change signal here on the Falcon. This is what we call the early trend change. So the trend change signal always is this little test of the extreme and the reverse. The early trend change signal on the Falcon develops just as the trend line changes color. So we produce the buy signal. We have this characteristic little up, down, up pattern. And you'd be looking for just a quick little move higher. You want to be a little more conservative with your stops on the early trend change signal, because the early trend change signal will eventually develop into the proper or the bigger trend change signal. All right, just kissing the profit target there. Only need another tick or two. And there we go. So no shortage of opportunities this morning. My goodness, what a day. Now we're entering this sideways trading range again. We do have a number 3 signal printing. Ooh, am I going to get a chance to get on board there? I'll throw that order down there as my just in case order. I really would have liked to have entered here. I hate getting in really late. I may get another chance at this one. We'll see. No. All right. So it was a valid opportunity, but you had to be a little bit quicker than I was. So the market came down, hit its high probability target, and then started to reverse higher. Sometimes when the market's moving this quickly, what you can do is you can lock yourself in manual mode so you don't get overexpose yourself, and you can just use your buy and sell buttons. That's always a fast way to get into the marketplace. Producing a counter trend signal now. I'm not so sure how keen I am on trying to buy this market at this point. Although the early trend was up, wasn't it? So here's the big question now. Is this counter trend, is the buy signal counter trend, or is the buy signal with trend? The market's definitely conflicted here a little bit. We do have a first micro macro cross to buy, so the hawk showing some early bullishness. I may use the second push entry opportunity. Oh, now it's into yellow bars, so we'll scrub that order. I thought we were going to have a chance there for a quick little buy on the hawk, perhaps. Another sideways trading range. Could do another OCO order. So once again, you're going to short below here. You're going to buy above here. And I will enable my stop strategy. Getting another a series of number 3 signals, but you can see we're kind of stuck in this sideways trading range. When you encounter a sideways trading range, the best course of action is actually to let the market get out of the trading range and then show you that it can stay out somewhere. It's going to retest that range and then come back with another sell signal, or if it breaks to the upside, it's going to come back with another buy signal. That is the best course of action. Trying to trade it within the range could be very, very difficult. I may give them a couple of ticks on either side. I don't want to get grabbed here too early. As I mentioned, those fake breaks, or otherwise known as one-tick trends, can be pretty expensive. Okay, so here now a test of the top end of the trading range. We may produce an early number one signal here if the buyers can muster a rally. So the early number one signal is simply the clouds are not fully crossed yet, but like 75, 80% crossed. It's always preceded by a pullback. We don't have a signal generating though. The market's just kind of bouncing around a little bit. I think I would actually favor a bearish break. But here we go to the upside. Oh, shoot. Okay, so I got bumped out of my order there. I can reinitiate the order just by hitting my buy button. And I think I'm going to have to hold my stop here to start. Okay. Enable the stops. Come on, a little bit more. I think I'll look at taking break even when and if we exceed the high of that bar right there. I'll give them a little bit more room back to the hard edge. Not looking all that promising at the moment. No, it's a sideways trading range. You know, you can't ignore the left side of your chart. All right, well, the upshot is if they're not looking to go higher, there is a chance they may try to head lower again. In fact, here on the Eagle, we haven't looked at the Eagle here for a little while, but we do have a green bar sell with a second push opportunity on that one. So you could look to take advantage of that. And this is a tricky one because, again, we're kind of trading back inside this sideways trading range. Still thinking the market might try to get back down to 7,200. So when I'm looking at this, I'm thinking maybe this is a bear flag. You see, on each bullish rally, we're not seeing a whole lot of bullishness, are we? The rallies are fairly short-lived. We're not really advancing in prices. So that makes it, kind of gives it that bear flag flavor. Technically, the band has turned bullish, but it's just ever so slightly so. Yeah, Steve says if you think this is bad, try the mini Dow. Mini Dow tends to be a little bit more subdued. All right, we'll cancel that out. A lot of yellow bars again, a lot of sideways trading. Well, here on the, no, I'm not going to do it. I was going to point out this red bar buy signal that you could short below. That is a doable trade, by the way. Pretty ugly, though, with all those yellow bars in there. Getting another warning dot on a green bar sell here on the Eagle. Now looks like the buyers are not ready to walk away. And we've got ourselves another nice looking little rally here. Okay, now we've got a proper first micro macro cross higher. Trying to figure out whether the eagle has broken out of a sideways trading range or if this is still like the bear flag that I showed you earlier. Or perhaps the trading range is bigger. Maybe it's like that. Yeah, more yellow bars. We're starting to hit the skids here a little bit. Okay, first micro macro cross lower on the hawk. Possible trend change signal building here on the falcon, and a possible number one signal building here on the raptor. We've got the warning dots. It should print right about there. I got to risk it fairly deep. There's the number one. And I'm going to try to drag this one out again. We won't be greedy. If I can ride out this swing, ideally stops should go up here. When in doubt, anything past what looks to be about halfways should keep you relatively safe. Oh, come on. Play nice now. Again, the low of this morning, the whole 72.20 zone being a little problematic. This is where the buyers kicked in after all. It makes sense that there would be some buying pressure here again. You know what? I'm going to force the trade to break even at this point. I'm a bit of a chicken on this one. Just because the market's been bouncing around so much. Come on. You can do it. Oops, let's get that back to break even. Come on, you know you want to go lower. You know you want to go down here to the next support line, which is the median line. There we go. As we get closer to the profit target, I'm really going to start to squeeze the trade. And I'm going to move now to my bar high low strategy, which is going to be ultra aggressive. There we go, just to protect a little bit more open profit. And at this point, I'm going to take a look and see if I would have done better with the ATR. If perhaps the wider stop, nope, I still would have got tagged out. So hooray for me. Rolling my stops in a little bit tighter. And so far, a very good morning. I would have met my trade quota by now. And it looks as though we've still got some bearishness in the market. The sellers seem to be a little bit stronger here, and it looks like they're going to try to push the market back down to that 7,200 zone. Maybe even yesterday's lows. Yesterday's lows were 71.66. Now that would be on the 24-hour session, the combined session. I think the intraday was around 71.80 if I remember correctly. But it does look like that's where we're heading. Wow, I should have hopped back in. Had another chance to get in here on the nice little macro pullback that developed mid-trend. This is the one that stopped me out, but gave me another signal to enter short. Great gains on that one. Mickey asking, what is your quota? I'm a big believer in the notion that less is more. Not less money, of course, but fewer trades. A lot of people come to trading, and especially those who are scalping, and they think they need to be in and out of the market, 20 or 30 times a day to make money. They hear about the high frequency traders, and yes, they make money that way, but as someone who's trading from home or from work, it's going to be really, really difficult to emulate them. Their computers are super powerful. Their trading algorithms are ultra complex. They keep switching up their algorithms. It's just a really, really difficult way to trade. In fact, I remember years ago, someone came to me for coaching, and he said, Eric, I want you to teach me how to trade 100 times a day. And I said to him, you're never going to make money trading 100 times a day. Well, he didn't like my answer because he didn't come back. The fact of the matter is the math does not lie. You don't need to trade 20 times a day. You don't even need to trade 10 times a day. It is much easier to find 2 or 3 profitable signals than it is to try to find 20 or 30. Now, intuitively, that should make sense, right? Not all signals are created equal. Look at this pretty number one signal that we took advantage of versus trying to trade this kind of mess, right? So if you come into trading with the idea that I only need to find 2 or maybe 3 good signals today, that's going to do a couple of things for you. First off, it's going to make you much more selective. When you see a signal print, you can ask yourself, is this one of the 2 or 3 best signals I'm going to find today? If you think so, then go ahead, throw some money at it and see what happens. However, if it's looking kind of questionable, even if you can't put your finger on it, but something in the pit of your stomach says, maybe I ought to wait, then don't take it. If you can find 2 or 3 signals a day, and if you make just $50 on each of those signals, so you're looking to make between $100 and $150 per day, you can make as much money as you want. Because after that, it just becomes a numbers game. If you can find 2 $50 trades a day, you're essentially earning $100. We're going to ignore commissions and fees here for the moment. But if you can make $100 a day trading and you do that every day, that's $20,000 a year trading a single contract. All right, you say, well, that's very nice, Eric, but I can't live on $20,000 a year. All right, well, what if you traded 3 contracts? That's $60,000 a year. I know a lot of people working a lot harder than trying to find 2 or 3 winning trades in a day to earn their $60,000. 60,000 not enough? Trade 5 contracts. That's 100,000. And so on it goes. When you get to the point where you start trading 10 or 15 contracts at a time, you'll probably still do okay in a market like the NASDAQ, but it may be time to start looking at a more liquid market like the E-mini. The E-mini, you know, you can throw 100 contracts up at the E-mini and it won't even flinch. Whereas you put 100 contracts in play at the NASDAQ and you're going to start moving the market. You're going to start incurring some serious slippage. But that is the logic behind it. So my trade quota is 2 or 3 trades. If you're asking about my money quota, I like, if at all possible, I like to hit 4 figures. $1,000 would be a nice daily quota. But again, you don't need to chase a bunch of signals around in order to get that. You should focus on trying to find what you think will be the best opportunities of the day. And sometimes it's easy, you know, sometimes the market makes some very decent moves. You know, this morning that was a little bit of a surprise, but certainly the follow-up signal had no issue getting to its profit target and then some. You know, we looked at the first eagle signal of the day, and more often than not, the first eagle signal of the day does hit its target. So there's your $200. And again, from here it becomes just a numbers game. $200 a day, not enough? Trade 3 contracts, trade 5 contracts. That's why the trade manager is so important, because you're controlling your risk, right? For the benefit of the new people in the room, I haven't shown this for a little while, but I'll show you this great little tool we have. Okay, this now is called the Money Expert. You can go to this page, indicatorwarehouse.com/money expert. And here's Joe trading his account. Starts with $10,000. He's trying to be careful, so he's only trading single contracts. And after 100 trades, Joe has done pretty well for himself. He's up here a little over $16,500. But how would he have done if he had the ability to trade multiple contracts? Okay, I don't like these equity curves. Mathematically, they're sound, but in real life, they're a little bit more difficult to do. Although I did meet a fellow who, on his very first trade, ran up, by adding contracts, ran up a $10,000 account to $40,000 on a single trade. So it is possible. But here's the point. If you control your risk, and even if you only have a 50-50 system, oh, this is actually a pretty decent equity curve. This is actually very realistic. So Joe's starting with, Joe's the blue line. We are the line with the multiple contracts. So we started with 10,000 and we ended the 100 trades with about 10.5. But the point of this is when you're winning, and what's happening is here, when we're winning, we're earning extra. You can see we actually got up to about 13,000 before we incurred a string of losers, which kind of put us back to neutral. But at the end of the day, we're really not that much worse off than if we had just traded single contracts. Let's try it again. Okay, well, like I say, mathematically this is possible, but it's not very realistic. This one, a little bit more realistic. So we're starting with 10,000 and we're plotting along a few winners, a few losers, and we're finishing a little bit under 13,000. But had we used position sizing, yes, some of the drawdowns here when we hit a run of losers actually brought us a little bit lower than if we had been trading singles, but look at the power of using multiple contracts when you're using your winners. So that same 10,000, even though you finished at just under 13, you could have earned about $22,000. Okay, I'll do just one more. This also a very realistic equity curve. So uh, the first dozen trades or so were pretty much no better, no worse. We're slightly worse as we hit this losing skid, but look, we more than make up for it when we start to hit a few winners. And again, at the end of the day, we're either going to be not really worse off than trading singles or even slightly better. So you can see here, we finished the 100 trades at around 12,000, or had we used multiples just under 13.5. And you can play with these settings. You can, what happens if I'm only 45% profitable? I'm actually incurring more losing trades than winners. Okay, well, again, mathematically that's feasible, but let's try to do something a little more realistic. Here we go. So you can see we're pretty much even up. And don't forget, we are losing more than we're winning here. But we hit a good little string of winners that paid off a little bit. And again, at the end of the day, we're slightly better, certainly no worse than if we had been trading singles here too. We're lockstep with Joe, about 60 trades in, and then we kind of break away because the multiples, the effect of trading multiples takes over. You can also left click on this chart and you can get the trading record, and what you're going to see is these are your bread and butter trades. There's no $1,000 home run trades in here. Oh, there's a $500 one. I think that's as big as it gets. But look at the power of the multiple, right? Because we traded two contracts, that $500 winner was actually a $1,000 winner. But the rest of them are all going to be your bread and butter type trades. Little. This is based on the E-mini, a little $37.50 tick, a little $25 trade there, $150 trade. These are all very realistic. And they're randomly generated. So it's not like we're stacking the deck. All right, so a little game for you to play with. Perhaps convince yourself of how important it is to be able to trade multiples. And don't get frustrated if you're trading a small account and you can't afford multiples yet. That's one reason I focus on a market like the NASDAQ, because it's only $5 a tick. The mini Dow, another good one at $5 a tick. The Euro, the 6E, because they've reduced the tick value there, 6.25. So those kinds of markets give you a better opportunity to actually trade more than one contract and increase your earnings. All right, here we are bouncing around again a little. Getting a little bit of a buy spurt going on. Oh, there was a, while it was rambling there, we had a nice little late filter entry signal develop here on the Falcon. So the late filter entry occurs when the filter goes out of sync, comes back into sync. The trend line itself never changes color. Here was another one back here. Very, very strong signal. When you see those develop, it's almost as good as putting money in the bank. Well, the buyers really making a strong recovery after the bears knocked them down. And we're just kind of settling in now, going back and forth again. All right, we're going to see here in a moment whether the buyers have enough to keep the market supported We're kind of flip-flopping here a little bit. Starting to introduce some yellow bars on the hawk. Falcon's trying to make a trend change. We're getting a little bit late in the day as well. I know we've only been trading for an hour and a half, not even, a little over an hour. Well, we haven't really gone anywhere today. There's quite a bit of activity, but you can see here on the daily, prices ranging, but so far, we're pretty much where we started the session. Okay, we got a first micro macro cross here on the hawk. The Falcon trend change signal actually came back here. I'd be looking for a trend line touch. Okay, now we're into the trend line, so we may get a trend line touch. And we're into the hard edge here on the Eagle band. So again, it's all fairly neutral. Possible four arrow consolidation now and a macro pullback, kind of piggybacking on each other here in the hawk. The Raptor produced a number one signal to buy, but wasn't really quick enough to get on board there. Yeah, a lot of back and forth right now. We do have a second push opportunity here on this number one signal. It's a little bit drawn out. So the second push simply means we have allowed the signal to engage. We see where it reacts, and then we would use this bar as our signal bar. But like I said, had I taken it on the hash mark, I would be at my profit target. No, I think we're just kind of in a bit of a holding pattern here at the moment. I thought maybe the sellers were going to push back, watching here the eagle, and we're getting that lower swing high. That's making me a little bit more bearish. Oh, here, I got a chance on the hawk. I've got a red bar buy that I can short. I wouldn't go in this heavy, by the way. It's a little bit late in the day, and the market has been bouncing all over the place. I might throw, okay, now that they've given me a little bit of room, let's throw a single on it. No, it's retreated too far, and it's actually working a first micro macro cross higher now. Oh, look at that. As soon as I call that for a buy, it starts to reverse again. That's how you know the market's moving sideways, by the way. When there is no follow through. We just got a whole lot of yellow bars again. Falcon trend line really, really flat. A lot of breaking up here on the filters. I'm wondering whether we have a bracketable range here. Suppose I could look to short below here and buy above here. Again, not the best looking trade, and like I said, if you're only looking to take 2 or 3 trades a day, do I think this is going to be one of the best opportunities today? Probably not. I would expect more from a downside break, I think, than an upside break. And all I've done is I've identified this as my sideways range. Okay, we're producing a number 3 signal as a continuation signal, so it looks as though, at least according to the Raptor, the buyers are trying to push the market. We do have an opportunity now for a second push on the entry, which would pretty much coincide with the OCO order that I have. All right, so they filled the OCO and we'll get a stop in play. I'm going to hold the stop a little bit here below that swing low that I was looking at. And I probably should have a modest profit target. You can tell by the momentum of the bars as well that a lot of the market momentum has faded here. No, no more love from the market. Things just, like I said, a little bit late in the day. All right, gang, probably going to get tagged out here in a moment. We'll button up shop here shortly. If you are going to hang out and, excuse me, and try to trade more today, I think you can expect more of the same. Just more of this sideways trading. There might be a flurry going into the close, but I think Floyd was right, you know, with the FOMC minutes out tomorrow afternoon, trading is going to be a little bit of a dud from here on out. Tomorrow is probably going to be really painful to try to sit through. All right, everyone, have yourselves a great day. Be careful out there. I will see you Wednesday. Bye for now.